Hi, I'm Rob Mitchell. Thanks for joining me today for Smart Trend Secrets, Trading Range Expansions, and How to Predict Them. First off, what I'd like to do is cover our disclaimer. Past performance is not necessarily indicative of future results. There is a risk of loss trading futures. You know, I've been helping traders for quite a few years now, and I've had the opportunity to work with a lot of traders at many different levels. And one thing that I've learned that's extremely important is that you must be trading with risk capital, money that you can afford to not be using for your daily living expenses and things like this. It's very important that you're using risk capital when you do trading. It opens up the door for you to connect with the process of trading and not get caught up in trading money. Very often if you trade money, you get caught up in the herd mentality, and it's actually those participants that we're probably ultimately exploiting in some of the techniques I'm going to share with you today that you can use to trade to your benefit in just about any market in the intraday time frames. So let's take a look at what we have today. The big picture. We're going to cover secrets of sweet time. We're going to cover identifying and exploiting large-scale trend patterns to your benefit. Trend systems that work at the 80+% level and help manage risk. Hidden patterns in order flow and trading lead-outs. The methods discussed here can be used in any reasonably volatile market in the intraday time frames. The nature of large-scale trend patterns and positioning yourself for it. One of the single biggest mistakes intraday traders make is trading based on immediate price structure alone. By trading based on the bigger picture of what's happening in the market, a trader can trade for range expansion and get positioned for that range expansion. Managing risk by trading with respect for that larger picture, and you can get caught in larger trades that skew things in your favor in the long haul. Today in this video, we're covering a few of the dirty dozen trading patterns that we use to align us with the bigger picture and also open the opportunity for advanced market knowledge and learning, which is very important. So let's take a look at some larger factors in exploiting a market's trend and thus range expansion. First, I want to cover the sweet time. One bigger picture factor that contributes to your success is that some times of day are better to trade than others. In crude oil, we call it sweet time. And this occurs each day between 10 a.m. and 11:20 a.m. Eastern time in crude oil. In other markets, actually similar times, for example in the stock indexes. But this is a simple table that I've done for you below. Sometimes this is called a seasonal tendency. You're looking at the way the market behaves inside of a given time frame or season and reducing that down into the intraday frame called an intraday seasonal tendency. And this is an advantageous way to position yourself for better risk and reward to get aligned with the trend and for range expansion. I'm going to cover this table with you right now. Let's take a closer look at this. Notice that the first half of the day gets 85% of the action and the remainder only 15%. What do I mean by that? I mean that 85% of the day's range is accomplished by the F period or by the middle of the trading day. In this particular market, this table is for crude oil, and we have 11 periods during the day with F period being in the middle. And you can see 85 under the F there, showing that 85% of the day's range expansion occurring by that time. You could also glean out some other information from this table. You notice that the first period of the day only has 32%, and the next period of the day only 47%, and then it starts taking a jump between C, D, E, and into F period. And then following that, F into G, you only increase by 5%, then only 2%, then only 2%, then only 1%, before you finish the day. In the final period of the day, you pick up a 5% right in there. So it's very important to position yourself during the sweet time, and that is between 7 a.m. Pacific time or 10 a.m. Eastern time and 11:20 or so Eastern time. So what are some observations that we might glean from that further? Well, you want to take your trades early in the day during the sweet time, when that expansion is more likely to occur. You're lining things in your favor by doing that. And you want to trade a little bit less after sweet time, during those periods where you're only picking up 5% of the day's range, or even as little as 2% of the day's range, as it is from going from G to H, for example. So expect trades after sweet time to take longer to develop, and so you have to be more patient if you're trading later in the day in general. Taking advantage of high probability trend momentum patterns using smart trend patterns. The smart trend system uses high probability trend continuation statistics to help align things in your favor. Years and years ago, it used to be trading in stocks and in things that were collections of commodities, for example, or stocks, for example. You would put those together into a composite, and that would make something like an index. And what would happen with those kinds of instruments is they would have very strong persistency in their trend. And you could actually predict a movement in the future based on an immediate movement in the past. This is called persistency, price persistency. We're going to talk a little bit more about that. So what I had done in the development of the smart trend system was I made it so that the color of the bars would predict the next color at about the 80+% probability level, lining things in your favor for that kind of persistency and trend follow through. So what you want to look for on the charts we're about to look at is the color changes. And then we can use the dirty dozen trade filters that we use, for example, sweet time, to identify the best trend opportunities using this chart and various bar types. I'm also going to cover some other of the dirty dozen a little bit later in this video to help you to get even more firepower behind your trend trades. So looking at this chart, this is a 1,000 ultimate tick bar chart that's available through our site Indicator Smart. And you can see that I've just made a simple system out of this using a software called Bloodhound from Shark Indicators that colors the background of the chart. And you can see that you get a great deal of trend persistency on these bars. The nature of trend and how to predict it. One of the biggest secrets in trading trend and range expansion is that market tends to exhibit price persistency, as we were just discussing. Because of this, you can make better predictions about trend continuation, and thus range expansion. You can't see this just by looking at charts. It requires special tools because markets aren't as clean as they used to be. I was referencing how we used to do that years ago, but these days the market data is much more complicated and dirty, you might say, and so you have to use special tools to filter that data and give you vision inside the market and present it in a way that's not confusing. This frees you from indecision, and especially when the relationship between the bar ranges and the larger scale trend are understood. What do I mean by that? Well, looking at the chart that we just looked at, for example, you can see that the ranges of the bars are small with respect to the size of the range expansions. And what that equates to is creating an opportunity where risk is low and the potential for reward is high. For this reason, trend analysis, properly done, can be a significant edge in your trading. and can stack things in your favor. This is a 3000 volume chart in this market using the color changes on the background there. And you can see that you get good persistency in that chart as well. In a few minutes I'm going to talk about lead out patterns that you can use to even improve this kind of a system. So what are some of the benefits of this kind of trading? Well, it's really excellent for entry level and for money management, deciding where to get in and where to get out. In this method, on a higher level, you can use order flow related bars like we looked at a few minutes ago. And this can help you get caught in excellent larger scale trades with excellent probabilities. And here's a 1000 UT chart again. You can see that the bars are small with respect to the overall movements that are occurring in the market. The trend system is really easy because it reduces price action, momentum, and order flow leadouts to a simple color change, red or green. Trend charts very often tend to move away, making risk manageable, especially when you consider the small size of those bars. On that ultimate tick bar chart we looked at, very often the bars are only about 10 or 11 ticks, and the movements are much larger. We're going to see in a table in a few minutes, I'm going to show you just exactly how big some of those range expansions become. But for now, let's take a look at how we can kick this up a notch. Let's take a look at a tool that will help you to see where traders have gotten themselves on the wrong side of the market, often at about the 80% probability level. And we can use that to get ourselves on the right side and line ourselves up with this trend system to make it even better. To do this, we use a trap trader oscillator from Indicator Smart. What the trap trader oscillator does is it analyzes order flow over the recent price action in a simple to see manner. A lot of order flow tools that might be available out there are complicated to read and have hundreds of numbers on a chart and can leave you unsure about what's going on. With this kind of a method of reducing all the order flow down to one kind of pattern leaves you with less indecision in your trading and makes you be able to stay in for the long haul because you don't have indecision with the smaller alternations that are occurring in the market. That's that same kind of filtering we were talking about a minute ago. Now, when used to look at the market in conjunction with price action patterns, you can see where traders get caught on the wrong side of the market. And as the market moves against them, these traders have stop orders that will tend to propel price in your direction and carry you into a low risk, often free trade situation. That's where you see that price action moving away, and you can take off a contract, for example, and get to a break-even trade on the remaining portion and just let it run. So one form of a pattern that we use with the order flow, here's the trap trader oscillator on the bottom of this chart. And I've pointed out for you where the trap trader oscillator is leading out. Anytime you get a pivot in the trap trader oscillator and it trades back through it, you can use the smart breakpoint system. This is a smart breakpoints template. It's just a simple template that I give away if you have the tools to put this together. But as that goes through that, it indicates that the trend is then down. Now you'll see these lead out here. This is using the color bars patterns, and so it won't trigger to the upside on these, and it doesn't filter it again until over in here you get the break going higher, and then you get the color change right here and it follows through. Similarly, you get the break right here, and then the color change occurs right over in here. Hidden patterns in order flow. We use about 10, there's really about 10 order flow patterns that we use using the trap trader oscillator that we've identified in our trading rooms over the years. And they're just incredible patterns. But this one that we're doing here, that we just talked about, is called the lead out. And lead outs tend to lead price action. They tend to lead price action. Lead outs tend to lead price action. I talked a minute ago about us looking at a table for how some of these trends can expand. Let's take a look at this one. We could add even more. This is one of the what I call the dirty dozen trend reading tools, and kick this up another notch using the same ultimate tick bar type that we looked at earlier. Using simple time and price alignment analysis, we can find where trends are likely to follow through, often to the tune of 20 or more ticks, to as many as 525 ticks on the short side or 286 ticks on the long side on this table at very high probability levels. Let's take a look. I have in these columns the biggest short interval that occurred, 525 ticks, and the biggest long interval that occurred, 286 ticks. And on the long side, 27 ticks is the kind of the minimum, and 44 ticks is around the minimum on the short side, with the median trade or interval for opportunity being over 100 ticks, or about $1,000 per contract in this market. But what you notice here is that when you get a 30 tick move or so, somewhere around 30 or 40, you'll notice that these are in the 98, 99 percentile. These moves that occur as the market starts going out over a given price time interval. And then you'll notice that at about the 85% level, that 100% right there is happening at about 40 ticks right there. But you'll notice when you get to 70 ticks, the probability is still 85%. And so what that means is when this sets up, you have an opportunity for 30 ticks or so at about the 85% probability level. This is the kind of analysis that we do in our trading rooms all the time. And it's just a simple way of looking at the way the market moves and looking for the way our opportunity sets up within that larger scale framework, which is really the subject of this video today. So by combining trend patterns with trend statistics, or sweet time or other dirty dozen methods of trend analysis, if desired, we can stack things in our favor to a larger degree. These more advanced methods are taught in the oil trading room daily. And now for a little bit more about our trading rooms. It's also taught in the stock index trading room that I'm going to tell you about in a minute. So what are the benefits of some of the trading rooms? You can kick it up a notch in these rooms with this kind of learning that we're talking about here today. Learn price action patterns that empower. Learn and benefit from advanced trap trader oscillator patterns beyond what we discussed today. And smart momentum patterns. Learn secrets of trends and range expansion, and more of the dirty dozen. Benefit from special content geared around personal development and personal growth that make you independent and at cause in your life, both as a trader and in your life. Benefit from everything we've covered here today in the trading room charts and a lot more. And this is applicable in any market. So go now to indicatorsmart.com, best HPI, indicatorsmart.com, best HPI, and take a look at how some of all these things come together. Let's take a look here. So here's a special offer for you today. I have here at that page, indicatorsmart.com/best HPI, the Smart Trend System and the Smart Breakpoint System, and the Ultimate Tick Bars package. These are all things that we discussed today in this video. And then also I have some coupons here for you for the trading rooms, the oil trading room and the stock index trading room. So use those resources to get empowered now. Benefit with the Smart Trend system by keying in the coupon code BESTHPI. It's the same as the link that you keyed in there, BESTHPI coupon code, and get another $100 off the already discounted prices that are there on any of the things that are there on that page. You can use that coupon. So to receive these benefits and more, and to get more resources on these methods and trading and concepts, go to indicatorsmart.com/besthpi. Simple works. I'd like to thank you for joining me today. For more information, go to indicatorsmart.com/besthpi, and you can also contact me on the link there if you have any further questions I can help you with. I'd like to thank you for joining me today, for learning some of these awesome trend trading patterns and methods, and look forward to seeing you in the room and in the future where we can be of service to you. Thank you. Thank you.